we're just gonna allow people to join for just a couple more minutes. Let me ask you guys, do you guys hear me loud and clear? Is it too loud? Is it too quiet? That way I can adjust my mic. I'm still trying to figure out how this the perfect setting for this mic, I guess. Just confirm that you can hear me. At least one person confirm, please. Perfect. Awesome. So Lorenzo, thanks for confirming. I'm going to post this video anyway, so if anybody missed the beginning, they have a chance to go back and revisit it. But we're going to go ahead and start with our charts for the day. These are all the charts that you guys requested. And I'm also going to do a chart on SPY or the S&P 500. That way we can kind of see what the market did in overall for the day and what we should expect from it tomorrow. But either way, I'm going to go ahead and start with the charts. The first chart we're gonna start with is gonna be Boeing, and that's for Julian. Julian, you asked me for Boeing. This is a really popular one. What I've done in this time of the live, I've actually already done the charting for you. It's already clean cut and set up. That way you guys can just screenshot your screen if you guys want to see the chart for tomorrow. That way it doesn't get lost while I'm trying to do it while I'm doing the live. But I've already done the Boeing chart. As you guys could see, Boeing has had a pretty rough few weeks ever since it made the high of 235 back on June 8th. This rise on Boeing is unsustainable, and we talked about this multiple times while Boeing was on its way up, that it was only going to be a matter of a few days before the stock kind of breaks down, because with enough buyers, yes, it could take it up, but all these buyers at one point, they need to take their profits, and as people start to take profits, the stock is going to fall. And you got to remember, the people that entered at this very point right over here start to take their profits right when the stock hits their stop loss at this support, and then the next round of people start to take their profits, and then the next round of people start to take their profits, and that's what keeps dropping it to every single support. Think of how your stop loss works, how you sell at a very specific support because you don't want to give back your profits. It's the same idea with the entire market. Traders are buying the stock, they buy it up, buy it up, buy it up, and the harder they buy it up, the harder it's going to fall eventually. And we saw that happen perfectly with Boeing as the stock dipped from its 235 high all the way back down to 165, and it managed to fill the gap all the way back down to the initial breakout point. This breakout point happened from this resistance right over here that it set on the left side. The stock initially had gotten rejected at that 165. Eventually it gathered up enough momentum, it squeezed its way down, and then finally started making higher highs back again, broke out successfully, had massive breakout, and then pulled right back to test that support, which is perfect. So the stock bounced perfectly off that support, and it created this channel down, wedge down pattern before it did. Now the question is the stock safe to trade just yet? My first answer is no, absolutely not. It's not a safe territory for the stock to trade yet, because as you can see, it has not made a successful higher high for you to enter the stock in a bullish direction. What you want to see the stock do is you want it to break over that 194.70 and then get rejected at 209, back down to the support it goes, and then that will be your perfect entrance right at this bounce at that support. Yes, you could enter the stock down here, this support, but that would be a more high risk play. If you had entered it right above 165, you would actually be in better hands than you entering it here. Only because if the stock was to be entered at 180 and it falls down to the support, now you're talking about a $15 drop. But if you entered the stock at 165 initially, your support is going to be so close to your entry that it's only going to fall so little before your stop loss hits. And so the perfect entry for Boeing would be to just hold off on it until it pushes over 194.70, or if the stock pushes back down to 165 and bounces, now you have a better entry for the stock because your stop loss will be just below your entry. But overall, this is the chart for Boeing. Now that we've broken down the micro picture, let's see what it did overall for the day. So these are the hourly candles. So every candle on this chart represents 1 hour of movement. I won't really get into explaining what a candlestick, how it's formed, because that's in a different video, but I will tell you that these are the hourly candles. What I'm going to switch to next is going to be my second favorite time frame to look at, and that's going to be the daily candles, because if you're looking to swing a stock or trying to see the overall direction that it has, it's better to look at the macro picture rather than just the micro picture. And so if we look at Boeing's chart on a daily candle, we could see that it's actually in a very bearish territory right now, considering the stock got rejected pretty strongly off that 20-day moving average. So that blue line right there represents the 20-day moving average. That means it takes the last 20 days of the stock and averages them out and gives you this nice fluid line for you to go off of. The smaller or the shorter the moving average is, the more it moves with the stock in correlation to the stock perfectly. But the stock, as you can see, got rejected off that 20-day moving average and got pushed back down to close below its 10-day moving average too, which is not a good sign for the stock. As any bull, you want the stock to be trading over these moving averages, because those are resistance points for the stock. So overall, Boeing is not really ready for it to be traded just yet. I would wait for it to break over the support that we mentioned earlier before you even make your move on it. But Julian, that was Boeing for you. Thomas, you had requested Ford. Ford stock is kind of in the same situation as Boeing, but it's actually giving you a better entry if you were looking to enter the stock, only because it's trading so close to a vital support that it has. The stock is only 18 cents over its support. Therefore, an entry now would only mean that you can only risk 18 cents before a stop loss hits. So we're looking for Ford really, and if you want a safer entry on Ford and you don't want to risk your money in between the 580 and the 620 range, you can always wait for the stock to push over 615, get rejected at 640, come back down. You can enter right at this very point right here and put a stop loss just below 615 and wait for it to consolidate before pushing up. Now remember, it doesn't have to follow this to the T. Sometimes it doesn't pull back all the way to 615. Sometimes the breakout is so strong that the stock gets carried over to 665. But one thing to keep in mind, guys, is that there's always a pullback. Anytime you look at a stock, no matter how high it's going, it's always going to give you a pullback, and that pullback should be your entry. You should never enter a stock on its way up, because then the pullback is just going to wipe you out and frustrate you. You always want to enter on the pullback. Now, say this fails and Ford doesn't actually push up over 615 because automobile sales are just dying completely. Stock may break 580, and if you're in the stock and you don't want to exit because you're a firm believer that the stock will make it back, you can always look for the next support that the stock has, which happens to be right at the 560 range. The reason why it's 560 is because that was the place that the stock had gotten that bounced up at when it dropped just last month. So the stock bounced up at that 580. Therefore, that became a support for the stock, and you can safely trade it down to that level before you can call it quits completely. But personally, I don't recommend this stock if it goes under 580. So Codex is next, which was actually the stock of the day today. Codex had a very interesting day. It was red all morning, which was unexpected. But the reason why it was red was likely because traders saw potential in it, but they had shifted their money right in the morning. Therefore, it dropped, but it stayed over a key support, which helped it get carried back up as it formed a pennant pattern that pushed it back up. But in terms of Codex, the stock overall still looks healthy. The chart looks healthy. It's really got a tough resistance at 1980 that's having a tough time breaking. As you can see, the stock had gotten rejected off 1980 multiple times. You can see that it got rejected back on June 23rd, again yesterday, and again today. So once it breaks over 1980, that's going to be a pretty great breakout. And another thing that I like about this stock is that it's making a fluid breakout. You don't want a stock to just shoot up out of its resistance point. You want it to make a nice curved pattern that it goes up in, slowly making higher highs and higher lows. That way the move is sustainable and not going to crash suddenly, which happened perfectly right on the breakout on May 11th. You could see the stock had made it all the way up but crashed miserably very soon after. These are the type of breakouts that are unsustainable. You want to be in a fluid breakout that takes the stock over a resistance in a nice fluid manner, not to use the same word again. But overall, Codex still looks strong. If it manages to break over 1980, your very next price point should be 21. And the reason why it's 21 is because that's where the stock had gotten rejected when it tried to rescue itself from that drop. You see how it tried to rescue itself from that large drop? Stock pushed up and got rejected. So that should be your very next price point at price target at 21. So let's see what this stock is doing on daily candles. On the other hand, the stock had a what we call a doji candle. So this candle is kind of an indecisive one. It means that traders don't really know where to take the stock next. But it doesn't mean that it's a dangerous candle, because you could see that volume was still flowing. The RSI is still healthy on the stock. Just keep in mind that when you trade it tomorrow, you want to keep a nice firm stop loss. Now, there are 2 stop loss points that you can hit for every stock, and it all depends on your own risk tolerance. The most recommended and the safest stop loss is going to be the high of the previous day. So whatever the high of today was, you place that as your stop loss for the stock. Or high risk traders will put their stop loss on the low of the previous day, and they allow the stock to kind of run down all the way to the low of the previous day before they call it quits. As you can see, that happened perfectly actually today. Codex went down to its low of yesterday before it bounced up and gave us a nice breakout. So overall, Codex still looks good. It doesn't look like it's going to flop out of nowhere, but keep in mind that um, coronavirus stocks in particular do have the tendency to flop out of nowhere. So you want to keep that firm stop loss. It's actually why we exited half our position on Codex today before market ended, because we want to prevent the worst from happening. So next is going to be Mark. Mark has just kind of been, in the same range for quite a while now. Let's see what its daily candle did. So this looks like a hammer candle, which typically means it's a trend reversal. But the thing with Mark is that there's really no trend. You can see that the stock is kind of just consolidating and moving sideways. If the stock had been going down and then it sees this candle, now it'll usually start going up. But Mark is just really indecisive. Just notice and compare the surge of volume that Mark had in the beginning of May and the beginning of June versus now. This is a stock so cheap that it's going to need tens of millions for it to really move. And luckily for Mark, they're in the news a lot with their involvement with what's going on right now. And they may just get that break, but they are going to need some kind of catalyst to push them higher. Overall, the stock is creating a pennant pattern, which is promising for us as traders. And as you can see, the stock keeps squeezing more and more as it tries to break out. The stock keeps on squeezing that pattern, and eventually there's going to be so much agreement in the price that's buying and selling at that they're forced to take it in a specific direction. But keep in mind that direction could be either up or down. That's the importance of having support, and its importance of having resistance, because if it breaks up, you want to know if that's a sustainable move if it breaks over key resistance points like 250. If Mark happens to break over 250 in the next few trading days, expect it to push to that 290 resistance. So that's Mark. Let's go ahead and take a look at Amazon. So that was the beast of the day. I mean, $128 gain. Absolutely phenomenal gain from Amazon. The stock had pushed over to all-time highs, but while it pushed to all-time highs, you want to keep an eye on the RSI. Considering there's no historical analysis on Amazon at this price in the past, we don't have a way for us to look at the very next resistance that it may get rejected off of. Therefore, our main focus is going to be the RSI. Stocks like Amazon, you don't want to focus on the minute RSI. You don't want to focus on the 5 minutes. Such a stock so expensive, you want to keep an eye on the RSI of the hourly, 2-hourly candles, and it is indeed starting to go into overbought territory. I've marked it here in the red for you guys. For RSIs, there's 2 general rules. Either the stock is over 70 or 80, depending on your own subjective liking. If the stock is over 70 or 80, depending on, like I said, your own personal trading style, the stock is now considered overbought and it's overdue for a pullback. Now, what do we say about every single stock that pulls back every single time? Every stock that breaks out every single time is that it's going to pull back to the initial breakout point. So don't be surprised that Amazon maybe gaps up tomorrow. If it gaps up well over 2893, it may pull back and bounce off of it. But a stock this overbought may pull back down to 2800 or maybe around 2820, 2825 before it bounces back up and continues its uptrend if it does so. So don't chase the stock on the way up. If you're in it, I do definitely recommend selling at open if it gaps up, because there's a very good chance that this stock's going to have as strong of a pullback as it had of a day today. That way it can correct itself. Like we said earlier, the market is all psychological. If there are traders taking their profits right at the top, more and more traders are triggering their stop losses and starting to take profits along the way as well, therefore creating less demand for the stock and more selling, therefore causing the price to go back down. And that's what correcting itself means. So that's Amazon for you. Tesla, let's see what Tesla was up to today. Same exact idea as Amazon, guys. There's really not a difference. In fact, Tesla is even more overbought than Amazon. You could see on the RSI, it actually reached 80 points today. But notice every time a stock reaches a high point and it gets overbought, it has a way of correcting itself back down. Once again, the stock makes a high, corrects itself. Once again, here it didn't do too bad, but at the same time, it still needed to come down. Whatever brought it down that day must have been a different story, and then it gains enough power for it to break out again, but it needs to pull back every time that RSI is overbought. So that's a very important indicator, and the RSI being one of the most vastly used indicators amongst all traders. I mean, I could show you an indicators list that will go from here till a whole football field worth of indicator lists. They're all doing the same thing, you guys, but you want to focus on the most important ones, being the RSI, the MACD, and the moving averages. The RSI being one of the most important and influential indicators. Like we said, market psychology plays a big factor. Therefore, the more people looking at this indicator, the more likely it's going to follow through of what you think is going to happen. Just like the more common a breakout looks, the more people are going to jump on it. So that was Amazon and Tesla for Cheryl. And then we have TUP and NEO or NEO for Motaz. TUP is going to be Tupperware. So this was on our watch list from last week. If you stayed in it, then props to you, because it's been a wild ride. But one thing I would like to notice right off the bat is the perfect example of a stock having a double bottom. You could see that the stock had a double bottom at its major support of $4 right when it pulled back. So the stock breaks out of $4. Like we said earlier, these moves are unsustainable when they're that high. Yeah, they're fun when you're in them, but they're not sustainable for the stock to keep going up. Pulls back down, bounces right off the initial breakout point, which happens 80% of the time. The stock pushes back up, comes back down, creates a double bottom. And now the stock is in safe territory, because now the stock is considered again making higher highs. So the stock crossed over this low that it made, and it made a high over it. So now what you want to do is you want to anticipate either, and then you push back up and ride the stock up and keep moving up that stop loss. So a perfect example of what an unsustainable breakout looks like, of what a pullback looks like, and what a double bottom looks like, all in one chart. Really interesting to see. Let me go ahead and clear this out, and let's see what the daily candle was doing on this today. Beautiful candle, lots of volume from the stock. RSI still looks very healthy on the daily candles. The stock managed to open right above that 10-day moving average right after creating this doji candle, which means that a significant move may be coming in either direction, and it looked like it broke to the upside along with a lot of volumes, closing it over the 10 and the 20-day moving averages. So this is a promising move from this stock. And one more thing to point out is that the stock broke out of a wedge down pattern. So the stock was wedging down. The more and more disagreement came to the price, the more demand came for it, and the stock pushed up from there. So great examples on TUP. Let's go ahead and take a look at NEO. So this is the daily candle for NEO. Every candle here represents 1 day of movement. You can see the stock is trading well above the 10 and the 20-day moving averages. Lots of green volume. The RSI doesn't look like it's overbought just yet on the daily, so the stock may still have some room to run. Let's see what it did through the day though. So is this move sustainable? Absolutely not. So the stock will either gap up tomorrow and pull back immediately, or you can see the stock will likely break down from here. So the stock may open flat, it may gap down at open, but a move like this, that vertical is not going to be sustainable. The stock is going to need a pullback eventually. Although the RSI was not overbought on the daily candles, you want to pay attention to other time frames, and on the hourly candles, the RSI is definitely overbought and it's overdue for a pullback. You can see the RSI is trading at 84 points, which is way in the overbought territory. Expect the stock to pull back to around $31 before it continues its mission on the way back up. Alrighty, so Netflix, let's go ahead and see. So Netflix is another case of Amazon and Tesla also making all-time highs today. The stock did push itself into overbought territory on the hourly candles. If you guys watch my videos a lot, you'll start to see that there's a pattern in my trading. All I pay attention to is the overbought levels, moving averages, and support and resistance. Don't overcomplicate your trading, guys. There's really not much to it. You just have to pay attention to a few indicators and you'll be completely fine. Is the move on Netflix sustainable? Same exact idea as Amazon and Tesla. It's going to need to pull back soon before it continues a move on the way up. Let's see what its daily candle did here. Stock's daily candle had a ton of volume, a very big surge after it moved over the 10-day moving average, a move that was widely anticipated by many traders. A lot of traders have been waiting for Netflix to push to another all-time high. I myself said that Netflix will probably be at 700 in around 2022. I believe that Netflix is still the leader of their industry. They don't have many competitors that are competing with the kind of amount of shows and the quantity of shows and the quality of production that they're putting out. So unless they have some serious competition soon, Netflix will likely keep on going up. But don't chase it on the way up. Wait for it to pull back down, give you a nice correction before it continues on its ride up. In terms of pullbacks, you should expect Netflix to pull back to at least $480, or it pulls back to $473, which is its initial breakout point, which stocks love to retest after they break out because it's all the people taking their profits all the way back down from the people. So remember, on this initial breakout, guys, so when Netflix broke out of this point, a lot of people like you and I, everybody in this chat, we all look at the same thing. We wait for it to break out, and then eventually it gets rejected. And then people start taking profits at the top. People start taking profits here. People start taking profits here, all the way back down to the initial profit taking point. So now everybody that's entered the position over 473 has gotten out of it. And what you want to see is the stock stays over 473.50 because you don't want to see everybody pulling out of the stock. You want to see the people who pushed it from 460 to 473 stay in the stock. But now if more people start taking profits, the stock will keep on falling. And there's a specific point where so many people have entered the stock that the stock may just create a falling knife and just gap straight down because there's a lot of people taking profits. Alrighty, so next is ZNGA for Daniel. So nice, beautiful pennant move on this stock. Let's go ahead and see what its daily candle is doing. So daily candle managed to open over the 10-day moving average, gapped up, plenty of volume. RSI still looks heavy, trading over the 10 and the 20-day moving averages. Notice on the daily candles, when the stock tried to dip over the 10 and the 20-day moving averages 3 trading days ago, it used the 20-day average as support and managed to bounce all the way back up to close over the 10-day moving average. So beautiful couple days from the stock. I am expecting some growth from the stock tomorrow. The pattern looks absolutely fluid. There's no forced movement. You see how the initial breakout point wasn't sustainable, therefore the stock needed to pull back and push back up, and now it started using the $9 support, pushed over that resistance at $9.50, which it created back on June 10th, and now the stock is making a nice round up. What you want to see it do tomorrow is break out of $9.90. So how do we determine a price target from here? We want to see if the stock has any historical analysis at this very price point. So let's go back in its history. Yes, the stock does indeed have price analysis at this point. It looks like the stock's next resistance is going to be unknown while it's on the weekly candles. Let's go ahead and zoom in a little bit to see if we can get a better idea of its history at this price point. So let's see here. So the stock has had a resistance right at this very point where it gapped up initially when it first IPO'd. So the stock's next true resistance is going to be right at $10.71. Therefore, that's going to be your next price target. One thing to know about stocks is no matter how old the resistance is or how old the support is, it's still valid no matter what. If even if it was created 10 years ago, but you always want to base it off of the most recent one you can find. You can go back 10 years, but if there's one 7 years ago, that's going to be the one you should stick to. So let's go ahead and take a look at Workhorse. So I actually didn't even chart Workhorse only because it's kind of pointless to be honest with you guys. Like Workhorse is a very high risk stock at this point. Although it's seeing a ton of volume, a surge of volume, it's getting pumped up to sky limits. We had mentioned Workhorse probably a month ago. I believe Montez asked me about it, and we talked about how clean of a fluid breakout it's going to have, and it indeed broke out beautifully. But had it been me, I would have taken profits on Workhorse as soon as I saw this red candle, because this is technically a reversal candle. The fact that it kept going up was just a bonus for those people who risked their money longer. But it's very important to know that anything that goes up, guys, must come down. Anything that breaks out must pull back. Even if down the line is going to make higher highs, you have to be real with yourself and ask yourself if these moves are sustainable. Therefore, I haven't bothered to really chart this stock, but I will tell you that you have a few resistance lines and support lines to go off of. But I'm going to warn you right now, once this stock starts to sell off, it will get halted. That is a guarantee, because it has had so much pumping in it that it's due for a halt. It's due for a major sell-off and a halt. So the stock looks like made a high of $20.40 on its most previous run. Therefore, you should put a resistance at that $20.40 mark. And the stock's next support that you need to base it off of is going to be right at 16. So that is not an ideal trading range for anybody. You don't want to trade a stock that has a trading range between $16 and $20. I don't mean to, put down your opinion or your chart request at all. By no means that's all what I'm saying, but I'm just giving you a forewarning that typically stocks that do this don't see a very happy ending. Let me give you an example of Tilray when it first IPO'd. I'm going to give you a very clear example, to be honest with you. So here is Tilray when it first came out back in July of 2018, and I was actually around to witness this. I never traded Tilray myself, not at this time at least. Do you see how high up the stock went? I mean, at one point, people thought that the stock was going to hit the moon, and it did at one point. It went to $300. But do you see how hard it crashed the very next day? I mean, you're talking about from $300 to 160, 120, and 197. So imagine you had entered calls or you had bought the stock at 300 only because you just couldn't seem to control yourself to let you know that this is not a realistic move. If you don't know what the tulip story is in the stock market, I suggest you look up the tulip story, because it will kind of give you an idea of how this greed overtakes people from hundreds of years ago, that it was still the same idea in the markets. Stock was obviously overbought and crashed down miserably, and it's been miserable since. I mean, Tilray is trading at $7 today. So just to give you an idea that nothing is safe, therefore honor those stop losses every single time. Don't ask yourself, what if? INSG, to be honest with you, I looked at this stock. I didn't know, I couldn't read what it was doing. There's not really much that I could see from the very specific pattern. What I would like the stock to do is break out over $12 before we consider it. Because $12 is such a strong resistance for it, if the stock breaks over $12, I expect it to have a nice fluid breakout. It'll probably get rejected around the 1280 resistance before coming back down, retesting the initial breakout point, and fluidly moving before breaking up. The only positive thing I have to say about this stock is that it's creating a nice round bottom for us for its next breakout. Definitely one to keep an eye on, but I don't think it's ready just yet to be traded. But thank you for bringing that one to my attention, Spencer, because I'm definitely going to keep an eye on this. I like everything that it's doing, but at this very moment, there's not a clear trading range. Next up for Spencer, it's also Trill. So Trill, what is it doing? It looks like it created a hammer candle for the day. This candle represents typically a trend reversal, but there's really no trend for this stock. As you can see, the stock isn't exactly going up or down. It's just kind of floating around in that trading range. But one thing to keep in mind about this stock, or one thing to point out about this stock, is that it's creating a bullish engulfing candle over the previous trading day, and that was the last 2 trading days, but not including today. So that's a good sign for the stock that perhaps a push up might be moving. What do you focus on for the stock tomorrow? You want to focus on that 10-day moving average and the 20-day moving average. The reason why is because you could see that the stock got rejected off the 10-day moving average and closed just above the 20-day moving averages. Therefore, those are your most significant support and resistance points to go off of. As far as the micro picture goes, if you're looking at this stock, the stock's trading range is between 7.75 and 8.40. The stock is not in safe territory to be traded. You want the stock to push over 840, come back down to retest it for entry, place a stop loss just below that support, and now you could ride the stock back up to hopefully break 880 and eventually test the high of 950. But as far as right now, I would wait for the stock to break 8.40 before entry. ANGI, and that's going to be for Lorenzo. These came up, I believe, a little bit later in the request, therefore I couldn't chart them for you guys. But let's see what ANGI looks like. I haven't taken a look at this chart at all. Let's take a look at what the macro picture looks like. So the stock for the day had a surge of volume. Based on this volume that came out of nowhere, let me go ahead and see if there's any news about this stock. Survey signals renewed emphasis on home improvement. So it looks like there's the catalyst that's moving the stock is going to be the home improvement sector. So a lot of people are starting to do home improvements since they're spending so much more time at home. So that's probably going to be why the stock gapped up. Let me see if it's creating some kind of ideal trading range for you. As far as right now, there's really no trading range on this stock. I would let it develop. Let me see if there's anything further. So the only thing I would say is you have support. The stock has a support. It has a support at $13. So you can draw a support line at $13 and wait for the stock to possibly bounce off of it. But it's not safe to enter the stock until it clears the last low that it made. So you can see that the stock on this very low, it tried to go back up but got rejected at 13.20. Therefore, that's the point you wanted to achieve before you actually enter it, and you can put a stop loss just below that point. So let this one develop a little bit further. I don't think it's quite ready to be traded. It might have been just a 1-day or a 2-day move before it kind of gets rejected and goes back down. Alrighty, so next up is going to be YRCW. So that was our popular one today. YRCW got granted. Let me read the news to you. So the U.S. to loan military hauler YRCW 700 million in 30% stake. So that's a really big deal for a small stock like this. Therefore, the stock had a massive gap up at open from $1.83 all the way back up to $3.40. Now, guess what, you guys? I guarantee you anything. There are traders out there who are probably not experienced in the stock market, and they bought this stock right at open, and the stock just plummeted on them right away. This is exactly why I tell you to not rush your trades in the morning. You need to be patient. You need to let the stock develop a support and resistance for the day. So right away when the stock opened and got rejected, you want to place a resistance right at the point in which it got rejected from, which was $3.40, and you want to place a support right at the very next place that the stock bounced off of, and that's going to be down at $2.73. Now you've established a trading range. It may not be the best trading range there is in the world, but at least it's a trading range for you to go off of. Through the day, the stock stayed over that $2.70 support and created other supports. You can see the stock tried to come down multiple times at these very points, but it stayed up. Therefore, you can safely put another support right at those points in which it bounced off of, which is right at $3. So there you go, guys. Now you have multiple supports and a resistance to base your stock off of, rather than going in blindly right at open and not knowing where you're going. Because you really have no support or resistance to base the stock off of. Alrighty, so that's going to be it for the day, you guys. I believe I went through 90% of the charts that were requested. I'm sorry, but if you had requested them before 4 p.m., I know I for sure got to you. Thanks again for checking in, you guys. Before I let you go, actually, let's go ahead and take a look at SPY. Let me go ahead and show you what happened in the market today. So when looking at SPY, it's important that you take a look at the 10 and the 20-day moving averages, because they're going to give you a lot of information. And it looks like SPY managed to close over the 20-day moving average today, which is a good sign for the stock. But at the same time, it looks like it had some bearish pressure from the top. A lot of people started taking their profits right near closing, because there are the June job reports coming out tomorrow. So on a weekly basis, we typically get job reports, but today's a new month. Therefore, tomorrow we get the entire June job report, which is probably going to come back pretty poor, considering a lot of companies are laying off more and more people. The coronavirus is far from over, you guys, and business is seriously hurting. Any move on the way up from the stock here, the stock is probably just hurting more and more. So you want to take a look at SPY at this very point, and you want to beware of those things. So what's next for SPY? It looks like today's move was likely unsustainable. You don't want SPY to move up that strongly, because it's gonna pull back just as strong. My sentiment for tomorrow is 60% bearish, 40% bullish. So I'm more neutral on what's going to happen tomorrow. The job reports are going to tell us what's going to happen, but we'll have an update in the morning. The very key resistance points to take a look at for SPY are going to be 312 and $314. If SPY gets rejected off of 312, it'll likely fall back and test 308, and then eventually test 306 if job reports come back bad enough. But thank you again for checking in, you guys. I hope this was helpful. I tried to include as much information as I could. I don't even know how long we ran, but if you're not subscribed, please go ahead and subscribe. And if you like what you see, please go ahead and hit the like button. Thanks again for checking in.